Now, when it comes to investing in general, there's more or less going to be a spectrum. Whether you buy into something that's offering a lower yield, but it has more growth potential or more capital appreciation potential, or something that is offering a higher yield right off the bat, more cash flow potential, but maybe lower growth in the future. Now, this means that at least for the most time, again, things can of course fit outside of this, but for the most part, stocks and ETFs are going to either offer more capital gains now or more income now with less upside potential. Now, like I said, we all fit somewhere on this spectrum. I'm probably a little bit closer to a little bit more yield right now and less growth potential, although I do own names like Apple stock and others that are absolute growth monsters. Now, I say this because in today's video, we're going to go through some of the most popular dividend-focused ETFs and stocks, some of the ones like you guys saw in the title of the video, and I'm going to share with you guys how much $25,000 invested into each one of these could pay you per year in dividend income. Now, this is important to note because some of the ones that are going to offer a lot less yield are also probably going to offer much more growth over time. So regardless if you take anything else away from this video, understand that for the most part, this is how most investments work. And I keep saying for the most part because again, there's going to be outliers that offer a high yield but also have grown like crazy. So if you want to see what $25,000 invested into tons of different popular dividend-focused ETFs and stocks would pay you per year in income, well, then make sure to stick around, drop a like down below, and let's get right into it. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. Now at the end of the video, I'm going to share with you guys the final math on every single one of these different investments and what $25,000 would pay you per year in income. But the first ETF that we're going to go through, and these are all also going to be from lowest yielding to highest yield, is going to be VU, the Vanguard S&P 500 ETF, an ETF that only offers around a 1.32% yield. So it's going to be further on the side of things where it's going to offer much less income, but much more capital appreciation. VU is an absolute beast, and this is because it invests in stocks in the S&P 500 index representing 500 of the largest US companies. Now, just as a side note, if you guys want to see me dig deep into any one of these individual investments, I post videos on my channel all about this type of thing, so check out some other videos. Now, if you look at VU's performance, even though it offers a relatively small yield, we're talking 568+% since inception, and this is just since 2010. So again, a perfect example of an ETF that does not offer a ton of cash flow, but has made investors extremely rich historically. Now, the next ETF that can pay you a little bit more in income because it offers around a 4% starting yield is one of my personal favorites, SCHD, or the Schwab US Dividend Equity ETF. Now, you guys know I love this ETF. I never shut up about it. That's because it offers a nice starting yield, it offers capital appreciation, it offers diversification, it's tax efficient. I mean, I can go on and on. But towards the end of the video, you're going to realize that this ETF also pays a little bit less in income per year, but again, much more than that of VU. Now, another very popular one, which I'm sure a lot of you guys have heard about or maybe even own, I sure own a lot of it, is Realty Income stock, ticker symbol LO, the real estate investment trust that's been paying investors consistent income and also increasing income for 110 consecutive quarters. Now, Realty Income stock offers a decent amount of yield, around 5.5% as of right now, offers some dividend growth historically, and not as of recently by any means, but has offered some capital appreciation. I mean, say what you want about Realty Income, but it's offered a 13.6% compound annual total return since the NYSE listing. Another popular one, Main Street Capital, which actually might sort of be on the side of things that offers a lot of growth, but also offers a nice starting yield. Main Street Capital is a business development company that offers around a 7% more or less starting dividend yield, and it's been growing like crazy. I mean, I can barely keep up with this one. A few more to go through before I share with you guys the final numbers of what $25,000 invested would pay you per year. The JP Morgan Equity Premium Income ETF, or JPIE, offers exposure to a high-quality diversified portfolio, and then with that implements written out of the money S&P 500 index call options that seek to generate monthly income, which as of recently has been going up a little bit, but more or less is around 9% yield. Now, a few more of my favorites is SPYI, the newest S&P 500 high income ETF. This one's offering a 12% yield. So now we're getting into some of the income generating machines that might not grow all that much over time, but have been paying investors like myself a ton of income, again, to the tune of around 12% per year. Speaking of NEOs, another great NEOs ETF, one of my favorites, is the NASDAQ 100 version of the fund QQQI, which offers around a 13 or 14% yield. Now, two more to go through before I share with you guys the final numbers. OMA, this ETF offers exposure to some of the top names, and BRK.B, which are some of the names in Berkshire Hathaway holdings. But along with that, with an option overlay, this ETF is seeking to pay investors 15% per year in yield. Last but not least, MSTY, the Yield Max MSTR Option Income Strategy ETF. An ETF that, just like I mentioned in the beginning of the video, probably isn't going to grow like crazy, but it is paying investors like crazy, around 136% distribution rate and dividends to the tune of $2 plus per share per month, just as of recently. But enough of all that to give you guys an idea of what $25,000 invested into each one of those different dividend paying stocks and or ETFs would pay you per year. If you bought $25K worth of VOO, you'd buy around 49 shares and it'd pay you around $314 per year in dividends. Now again, just because $314 isn't that much, remember how much VOO has grown historically. SCHD on the other hand could buy around 952 shares and pay you just over $1,000 per year. Now Realty Income could pay you around $1,443 per year in dividends and could buy you around 450 shares. Now on the other hand, with 25K invested into Main Street Capital, we're talking 460 shares with just shy of $2,000 per year of income. JPIE you could buy just over 440 shares and earn around $2,000 as well. JPQ around $2,800 per year. SPYI you could buy around 525 shares and earn just shy of $3,200 per year. QQQI around 500 shares, around $3,700 per year. OMA could pay you around $3,900 per year in income, and 25K could buy around 1,300 shares. Last but not least, MSTY you could buy just over 1,000 shares, and based off of the most recent dividend, we're talking $31,000 per year if you annualize things out. Now, like I mentioned, even though some of these names are going to pay you much less income, I wanted to make it apparent in this video that just because they pay less income do not make them bad investments. I mean, some of these names have grown like crazy, like I shared with you guys. Which is why, especially if you're newer to investing, understand that everything is going to have its pros and cons. If you buy into an ETF that's going to be a low yielder, sure, you're not really going to receive a ton of income every single month or every single quarter, but you probably will have exposure to at least potential capital gains. Where on the other hand, if you buy into something high yield, you probably are going to get a lot more income consistently, but there's going to be a lot less upside potential. Now, all that to say, before I go, I do have a question for you guys down below. If I were to ask you to pick one of these different ETFs or stocks that pay you anywhere from $314 per year in income upwards to $30,000 plus potentially, which one of these names are your absolute favorite and why? Let me know in the comments down below. If you guys enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.